Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Thursday, February the 27th, 2025, so end of the month almost. Okay, recording this about 7:30 in the morning. All right, so the main risk event in the last 24 hours has just been Nvidia. And I mean, to be honest, they came in pretty good for as far as what I can see and what my research is showing me here. Everything was good. We'll look at some of the metrics in a second. But just in terms of the price action here, you can see here what I've got here is essentially what the one standard deviation on for a 1 day option here. And so the market was expecting a lot more volatility, around about 10% move up or a 10% move down. And what you guys can see here is that it's hardly moved at all. And if we actually look at, let's say, a sort of a shorter term time frame, let's say a 15-minute chart, and we'll go to the extended trading hours here, you can see that when the price action came out, very, very volatile, but just sort of up and down, just within a percent or two. And now, as we're trading here, as I say, about 7:30 in the morning, essentially just up about a percent or so. So Nvidia the market looking, regularly, fairly sort of happy with that. And if we actually just look at some of the metrics there, I mean, this is a very, very strong company. And so I think the way to look at it in terms of the general indices is almost just, as the risk event has passed. But if we just quickly look, we see here I've just got a couple of charts here. You see that after the results were announced, quite a lot of volatility. But just sort of pulling back a little bit, if you look at the quarterly revenue, I mean, after the release of ChatGPT here, you can see that this is an incredible sort of company, almost up into the $40 billion revenue per quarter, just absolutely continues to accelerate. If you also look at the profit margins, there was some sort of talk that the profit margin was, maybe sort of 50 basis points less than the analyst consensus, but this is still a very, very profitable company. And as you can see here, the profit margins, almost up to about 70%. The operating margin here, although it is coming off a little bit. And if you actually look at the growth measures, I mean, they're still incredibly strong. And there's like 80% increase year over year, but they are slowing down a little bit. Does the market want to quibble with that? Maybe. We'll see. But I think just in terms of the general sort of risk sentiment, Nvidia earnings are out of the way, and that went sort of very, very solidly, more or less as expected. It doesn't really show a slowdown in capex for AI. Data center usage of AI seems to be sort of strong. Consumer usage seems to be strong. The forecast and the outlook from the CEO, was very good. They're ramping up their production of the next generation of Blackwell sort of chips. So basically, Nvidia sort of, if we take that as the bellwether for the AI kind of bubble, or is it a bubble, the AI sort of vibe, it seems to be pretty positive. So just looking back now at some of the charts, the market, I think, is in a bit of consolidation mode. We've had a lot of volatility, obviously, always coming from the White House, from Trump. And, as I said, I think the market was just looking to get through this Nvidia earnings here. So if we look here and see what happened, we can see that the VIX overnight is down quite a lot. And the VIX recently, probably leading up into the Nvidia earnings, has been in the 19-20 handle, down now in the sort of 16, 17s, 18. So still not at the lowest levels we've seen, which, were down sort of here at 14, 15, 13, but definitely sort of on the way down a little bit. We can see here the ES having a nice little sort of bounce this morning. Essentially, it was supported by the 100-day moving average. But what's interesting to me is just to see what happens next, because at this point, if we look at this Fibonacci retracement here, which is the sort of orange stuff, we can see here that we're not even up into a 38% fib retracement. And basically, for this to be sort of bullish, I mean, you've got the moving averages are, sort of flat, and maybe you could argue the 100 is sort of moving up here, although the 20 and the 50 are moving down. But really, the market here is kind of caught trying to understand just these big issues, such as, where is the US economy going, and what is the whole situation with global trade, and Trump's sort of tariffs. So there's this whole sort of confusion at the moment. The US, the video was good, so that seems to be moving upwards. But as I say, until it gets above this this 61.8 fib retracement at 6076 on the futures. I don't think you could say this chart has returned to being fully bullish at this point. Not even at the 38% fib retracement. So let's see how we go today in today's trading session. You first of all want to see it go through this fib level at 6018, and then maybe the 50% at 6048, and then, as I say, above the 68. So once it gets above there, you might say that we're potentially in with the ability to retest highs. Again, Nasdaq, similar kind of situation, actually a bit stronger. You see Nasdaq, a little bit stronger, bounced off more or less the 100-day EMA. That Nasdaq has pushed a little bit more into the fib retracements here, so pushing up towards the 50% fib retracement from this most recent impulse. Let's see how we go today. Let's see if there's any talk out of Trump. What we have noticed overnight is just a little bit of weakness in the European markets. You see the German DAX just kind of stabilizing here, trying to retest the highs, but just kind of stabilizing. So not yet sort of negative. This is still a pretty bullish chart. You see in the Euro Stoxx 50, which hopefully will come up in a second. Just a bit of stabilization. At this point, what we do want to see is if, from a technical perspective, because my point is that just as we're kind of trying to balance, this sort of uncertainty around Trump, I think the markets in general, a lot of markets are in consolidation mode. And so they're in range trading mode. And that's why I'm sort of starting to look at some of the technicals just to see what, some of those ranges are. So just in Europe, which obviously has had a lot of sort of strong flows on this idea of, a ceasefire, Russia, Ukraine, the idea that there's going to be a lot more defense spending, but also counterbalanced by the fact that there could be sort of tariffs. And we know that Trump just off the cuff yesterday in his cabinet meeting sort of again reiterated the fact that, potentially 25% tariffs could be coming on the European auto industry. But again, the market doesn't really believe him at this point. It's the boy who cried wolf. And we saw yesterday also with USD CAD and the euro that when he started talking potentially about sort of tariffs, let's look at the situation of USD CAD. The market only moved 20 or 30 pips. So we're really waiting to see now in the FX markets, and I'd say even in the equity markets, the market from Trump either, it wants clarity and it will probably not move much until and unless we get a specific and definitive imposition of tariffs or the non-imposition of tariffs. At the moment, it's very wishy-washy. However, the problem is that as we have this tariff threat overhanging, it's just going to be interesting to see if some of these equity markets, and indeed some of the FX pairs, can actually, break out of into new sort of trading sort of trends, or whether they'll just be stuck within a trade range. And you see here something like the Euro Stoxx again. It looks as though it kind of wants to retest the highs here. It failed yesterday. So far today, it's just kind of not quite sure what to do. It's kind of like a doji here on the Japanese candlestick. So just sort of seeing, well, what could happen. So probably just range trading for the moment. Definitely one to be looking out for. But we are in a sort of a low volatility sort of situation. Just looking over at Europe, we have the ECB next week. They are scheduled to cut, at least according to market expectations. So really, it's going to be about the commentary for the following meeting. But we'll get into that a little bit later as we go through. But just looking at the euro here, again, technically, I think this level around about sort of 105.30, that does seem to be holding here. You see here, it's happened 4 or 5 times, maybe at about the 105.30 level. Finding it very difficult. Not able to punch through, and also not really wanting to collapse, and I don't really have too much more to say here. I mean, basically what I think we need to see for the future of the euro and the US dollar is just, what is happening with the headlines. We also just want to know what's happening with the next stage of repricing for, let's say, the Fed and the ECB, because if we look at some of the differentials and the yields, we can see that, let's say, for example, the 2-year yield, that has come off quite a lot in the last week, but as we can see here, it's just reached what I was always saying here, this sort of trade box, this trade range here, and actually it's been bouncing over the last 12 hours and overnight from around about 4.1%, and that seems about right. At this point, we have the Fed priced for about 2 cuts this year. That seems around about right, and we have the ECB priced to cut, 2 or 3 times, and that seems about right. And if we look at the differentials, which we can see, where are my differentials? Sorry, just give me a second here. Uh, so let's say something like the US 10-year minus the German 10-year. You can see that they've come in quite a lot. So we've had this situation where we've had US yields coming down quite a lot, and the differentials between the US and the German yields have come in quite a lot. And now down, the differential here is about 1.85% or so. And that had been as high as about 2.35%. So we can see here that over the last, what's that, month and a half, 2 months, it's come in about 50 basis points. And for sure, that has weakened the US dollar. If we look at the dollar index here, you can see the Dixie, for sure has weakened quite a lot. And we also see the euro in general, the euro index has also sort of been sort of strengthening a little bit. But I think we're just at a sort of a sort of an equilibrium point now where the US yields have come down probably, enough, and the differentials have come in enough, and now we have to wait and see. So we're going to get a little bit of data today. We're starting to get some sort of inflation data out of Europe, so that's going to be interesting. Had the Spanish data this morning. But what is going to be here, and we see the Spanish data here, Spain preliminary Feb harmonized 2.9 versus estimate of 2.9. So no huge surprises there, but still a little bit sticky. And we've had quite a lot of commentary out of Isabel Schnabel, a few speeches in the last few days, and she's one of the kind of the intellectual cornerstones of the governing council. That she's saying maybe we don't need to be cutting too much. So there's a slight, I don't want to say hawkish, but there seems to be, rather than dovish, a bit of more of a neutral stance going into next week's ECB meeting. And we're just getting some ECB sort of minutes here. Evidence inflation. Okay, so for example, look at this. It just literally came through a couple of seconds ago. ECB account, some evidence inflation risks shifting to upside. So it's interesting. You see what's happening. There was a lot of sort of talk that, the ECB would be cutting because their economy is collapsing. And suddenly now we're seeing here, forward guidance, zones, right? Yeah. So we're seeing some sort of slight thing that a rebalancing that maybe, the European economy is picking up a little bit. There could be a peace dividend if there's going to be a Ukraine-Russia sort of peace deal. And again, the ECB maybe not as dovish as had been suspected, because we're seeing, Spain, as I say, the inflation remains relatively sticky. Not to say it's out of control, but relatively sticky. So in terms of the euro, it's going to depend on that. That could give a little bit of support to the euro, especially if there's a sort of a peace deal in Ukraine. On the other hand, of course, if the Fed decides to sort of stay on hold, that's maybe the low in US yields. Maybe also the US dollar starts to bounce a little bit. But we're going to also get a bit of a sense today, a bit more information about the US economy. We have initial jobless claims coming up in an hour or so. Whoops, I don't mean to do that. Initial jobless claims expecting 221. That is starting to go up just a little bit, but still very, very indicative of a very, very strong employment market. What's going to be interesting is the continuing claims expected to be 1.871 million. Again, with all of the, it looks as though, 20, 50, 100,000 US government workers are potentially going to be losing their job or are starting to lose their jobs. So at what point will the initial jobless claims and the continuing claims start to reflect, if at all, some of this weakening in the US sort of labor force, specifically the government jobs? So that's definitely going to be something, maybe it's a little bit early this week, but over the next, I don't know, 2, 3, 4, 5, 6 weeks. Be interesting to see if the initial jobless claims and the continuing claims does in fact go up, and that will start to sort of feed into this narrative that unemployment is rising. We saw yesterday Trump and Musk at the cabinet meeting in the US, definitely hammering home this idea that they absolutely seem to want to cut the deficit. Musk was there saying that the US is going to go bankrupt if it doesn't cut the deficit. So it's going to be messy. It is messy. It's going to be confused and chaotic because that's the Trump style. But if we just pull back, the bottom line does seem to be that the core focus is still on in theory trying to reduce energy prices around the world, trying to bring back some manufacturing to the US, perhaps using tariffs as some kind of sort of stick and carrot kind of approach, and yes, cutting the deficit. So that definitely seems to be a part of the thing, a part of the program. And if the US is serious about cutting the deficit and cutting wastage, you've got to say at the minimum there could be more joblessness and less government spending, and that in theory really should at some point lead to some kind of slowdown. Not necessarily a recession, but some kind of slowdown. And we're seeing that reflected a little bit. If you look at something like the term premium we're looking at this morning, so this is kind of the fiscal sort of fiscal risk and what the markets is thinking. And it's interesting that let's be honest, since Trump came in basically beginning of the year here, you see that this is on the 10-year in the US, it had been at about 80 basis points, and that's 80 basis points of kind of term risk. The risk investors demand to hold longer term bonds is simply instead of simply rolling them over month to month or 3 months to 3 months, quarter to quarter. And what we have seen is that it's come down from about 80 basis points to about let's call it 60 basis points. So definitely the market is starting to buy into this narrative that, maybe the fiscal situation is going to slightly improve, the deficit will slightly come down, and also maybe that, again, just looking at the yield curve we were chatting about yesterday, that's flattening a little bit in the US, this idea that the US economy slowly, maybe is going to be sort of deflating a little bit. We shall see. So at this point, I think probably what we need to be doing is just sort of waiting for a bit more data. We're going to start getting some data today, and then of course next week we get a lot more. We get non-farm payrolls, we get some ISM surveys and everything. So in the meantime, I think it's just a question of the market consolidating. Let's see how Nvidia goes today, and more broadly the stock indices. I'll be looking at some of the technicals. For example, you see here something like USD JPY. That seems really just to be consolidating here around this big 50% retrace, which is also, sort of a horizontal support. We have the Tokyo CPI this evening. That's expected. Well, let's just see what happens with that. But basically, if that comes in sort of sticky or even higher than expected, that's going to give more fuel to this idea that the BOJ might be sort of, a more comfortable hiking in May. And let's actually just look at that, what's priced in at the moment, because I think maybe it's only about a 20% price of let me just quickly bring that up. What's priced in for the Bank of Japan. So going here so you see here for the March meeting, we've got nothing priced in at all. But when it starts to get interesting is May, we've only got 5 basis points, 20% priced in. So what the market's basically saying here is that by the end of the year, it's like maybe 1.5 hikes. But I don't know if we get a hot sort of Tokyo CPI. We had recently some sort of relatively sticky inflation numbers out of Japan. Maybe this pricing here goes up a little bit. So in theory, that's going to be hawkish, and that should be a positive for the yen. But on the other hand, you've also got to say that the differentials, again, if you look at some of these differentials, they've come in a lot. And here I think I've got so this is the US 10-year minus the Japanese 10-year. And you can see that this has come in a lot. At one point, it was about 3.6% difference between the two yields on the 10-year. Now it's 2.8. So that's come down about 80 basis points. Now, just from a technical perspective, this does seem as though it does have a little bit more to go down. To come in rather. So this can go maybe down to here. But you've got to say at this point here, 2.8. These differentials have come quite a long way in favor of the Japanese yen. And if we just look at their outright yields, as I say, they're starting to get to levels where maybe they want to settle. So maybe a little bit more. But I would say that in terms of the USD yen, that this level here is interesting to see if this could break. I suspect this might hold, or at the most could push down a little bit more. So that's going to be kind of interesting here. It's going to depend on the yields in the US and also tariffs. Remember, we haven't had any sort of news about tariffs on Japan. Trump's sort of seeming to leaving the Japanese alone. So let's see what's going on there. But that's just a bit of sideways consolidation. If we look at a couple of other things, we look at USD CAD. Again, that had been very punished by the potential threat of tariffs and also the domestic situation. But what we can see here is that the tariffs weren't imposed about a week ago, no, 2 or 3 weeks ago. USD fell, and then Trump was saying maybe we're going to put tariffs on again, et cetera, et cetera. So we saw that going up a little bit and then just falling a little bit. So at this point, it seems to me that if the threat of tariffs does start to really diminish in the Canadian space, let's put it that way, there's definitely potentially room here for the Canadian dollar to strengthen, and maybe for USD CAD just to fall back, back into a bit more of a trade range, maybe down here 142, 141, something like that at the moment. Other thing which is interesting, I've been looking at the Swiss franc. We had kind of a double top here, which was rejected. And now it's come back down to this fib retracement level, bouncing off that. So interesting here just to see if, if things like this sort of safe haven, where the US dollar can get a little bit of energy and start turning some of these shorter term moving averages up and retest into the highs here. So again, um, just everything consolidating. You see even something like gold just coming off a little bit today. Let's just go into the metals. Where are we? Yeah. So you've got gold just coming off now at a pretty interesting level, almost not quite there, but there is some horizontal support on the spot about 2878. That's also the 20-day moving average. So yeah, you could argue that that's an interesting level there. But I'm just curious to see, like, let's have a look. Gold had the opportunity to make new highs a couple of times, failed here, and also failed there on the 21st of February. So there's been two or three sort of failures here to really push up into a new trend. And either we're in a sideways consolidation, and it wouldn't surprise me as well if gold potentially wants to have a bit more of a significant retrace here and come back down to one of these fib zones, maybe 2800, maybe test the 50-day moving average a little bit more, because we see, um, you know, something like silver, struggling not as much. And we see that copper, interesting one, copper, because there was this whole idea of, copper tariffs being imposed. And then, of course, no one believes Trump. And we had the 61.8% rejection, but now it's just bouncing around in a trade range. So I think the point is here, guys, not a lot of clarity. I know from just sort of doing research that a lot of the very big funds and asset allocators have really reduced exposure just because of the volatility around Trump. So let's see. We have two Trump press conferences today. One was with the UK Prime Minister, I think at 9 o'clock Eastern. Who knows what it'll say there? Who knows? And then I think at 2 p.m. there's also another kind of sort of a press conference. We'll have to listen to what he's saying. Okay, I'll leave it there. Let's have a look at initial jobless claims and the continuing claims and see what happens for them. Okay, I'll see you tomorrow. Let's keep on talking. Thank you.